Hello and very warm welcome to our latest urgent market update video for Thursday the 27th of March 2025. Now the title of this fairly brief video is Uncertainty Prevails. However, as traders, here's how to overcome it. So let's get into this. You're probably more than familiar with the current market conditions, but we want to just highlight a couple of very important factors when it comes to uncertainty within a market dynamic. And more importantly, how do we as traders really react to that dynamic, and what decisions can or can we not make? And we'll leave you with something to ponder on towards the end. Okay, so let's get straight into it then. We'll of course start with a risk warning currently up on screen. Just take a brief moment to familiarize yourself with our risk warning. Do feel free to stop this video if you need to. Okay, so let's get straight into it then. So the first thing to comment upon from a fundamental perspective is, what is the news flow behind these markets? So you'll probably be extremely familiar with a lot of the analysis around these current markets, and it's very difficult to I suppose to make a decision in terms of whether you're an out-and-out buyer or seller in these current markets. And what we can look to begin with is some of the market fundamentals. And again, what you'd probably be very familiar is some of the data is looking really quite weak in terms of some of the softer data points are looking quite weak. Some are looking relatively positive. So just this week alone, let's just have a look at a couple of these important factors. So if we're talking about manufacturing and services PMI numbers on Monday, we had much better than expected services PMIs, which means that services in the US as an industry are growing, and they're growing at a much faster rate that was expected. So obviously that's a positive thing for the economy. However, manufacturing PMI numbers are now contracting. So you've got one positive good news story and you've got one negative. We'll come on to Donald Trump because he's a category in himself in terms of the reasons why these markets are very uncertain. Then on Tuesday, we saw really negative and much weaker than expected consumer confidence numbers. Of course, that's not particularly good for a particular economy. So a bit of negative news on Tuesday, and we keep it ticking forward just a little bit. Yesterday, in terms of core durable goods orders coming in much better than expected, much better than previous as well. And the same regarding durable goods orders. So we're expecting a negative number, and as you can see, we've got a positive 0.9. So from a durable goods orders perspective, actually a little bit of mild good news there. We'll keep this going, and again, I'll come back to Donald Trump in just a moment. But today now we've had final GDP numbers and unemployment claims, and they actually came in line with expectations, which are pretty decent. And as you can see, final GDP numbers actually coming in slightly better than expected. So we're expecting 2.3, and we saw a number of 2.4. So with a lot of these data points, and tomorrow we're going to have core PCE price index numbers. So this is very likely to come in relatively close in line with expectations around 0.3. And that, from an inflation perspective, is workable, let's say. But we'll see if it comes in higher than expected or lower than expected. As we know from recent inflation numbers, we're beginning to see inflation come back down again. If from the data and the way in which the data is actually released, if we take it at its when you begin to dig a little bit deeper into a lot of the inflation numbers, you can be left feeling a little bit isolated or unsure as to whether these are truly representative of inflation within the economy. However, these are the numbers in which the markets certainly react to. So from a data-driven perspective, a lot of uncertainty. And this is where Donald Trump kicks in, because we've got obviously geopolitical turmoil as well, with a lot of Donald Trump's tariffs. Now, they range quite considerably from, I suppose, tariffs when it comes to steel and aluminium, announcing 25% tariffs there, whether it's a 20% tariff on Canada and Mexico and the European Union as well, whether it's reciprocal tariffs coming in on the 2nd of April. Last night we just had the auto tariffs again, 25% tariff placed on all motor vehicles imported into the US, and that's a global tariff. And we've got other tariffs like copper imports as well, potentially coming down the tracks. So we've got endless rounds of tariffs impacting trade, creating this trade war dynamic. And Donald Trump himself, the way he's conducting himself, is quite indecisive in its own right. So verbally, it's very aggressive, very front foot, very, refers to it as Liberation Day. But then when you peel away the surface, and for whatever reason, he does seem to row back on some of these tariffs. So there is a complete contrast between what he says and what the administration does. So it remains to be seen with these tariffs whether there'll be certain mitigations. Perhaps he's already spoken about, reciprocal tariffs on the 2nd of April being somewhat watered down. So this is in itself, I suppose, leading to some of the uncertainty. So some of the data is very much uncertain. Certainly the actions and behaviors of Donald Trump lead to uncertainty. If you were a big corporate, you'd be really wanting to find out how does this actually impact your bottom line and margins and, potential future growth. You'd be a little bit unpleased, and, you'd be very unsure about how you would commit capital expenditure, how much you would be able to commit to capital expenditure projects with so much uncertainty. It creates a bit of a problem. And as a result, we're seeing financial markets react quite significantly. So Donald Trump, with his tariff policy, is by itself a very significant and important factor for these markets, and broadly leading to significant indecision. That indecision doesn't just end there. We look for signals in other areas. For example, the 2-year Treasury note. We're just off where we were at the end of February, rather, and we're now sort of edging towards the close of March. The 2-year Treasury yield has actually dipped lower, and then it's dipped higher, and then we're sort of back to where we broadly begin, around that 4% mark. So not necessarily a decisive move from US bond yields, although we've noticed today that the 10-year is ticking a little bit higher at this point. But this is a good gauge for Fed policy. Last week we had the Fed pause at 4.5, so again uncertainty built in to for the Fed and their policy as things currently stand. That's not all. If you look at the Mag 7, and we'll just get NVIDIA up on screen as well, just to indicate, do we have any clarity from US tech firms? Well, this is the price action over the last month to what's going on with Mag 7. Obviously, we had DeepSeek in January. We're still seeing committed capital expenditure plans and projects, and a lot of announcements that Donald Trump is making around capital expenditure and commitments, financial commitments from companies that want to set up hubs and stuff in the US to avoid the tariff narrative. So there's an awful lot that these markets are trying to work through, and this is obviously a micro market, but one of the most important equity markets, or one of the most important equities around currently, having benefited from a pretty significant rally over the last couple of years. So there's broad indecision across these Magnificent Seven. We know Tesla is down or was down a couple of days, somewhere to the tune of around 50%. So there's definitely pockets of weakness and concern. A lot of the data is proving itself to be somewhat relatively positive. We've got Donald Trump with all of his up and down narratives around things like the tariffs. And then we look at the charts. So from a technical and sentiment perspective, we're getting broadly mixed signals. This is just broad charts, really, the daily timeframes of these markets for the scale is going back to the end of last summer, where we've really kind of struggled to make a huge amount of progress. If you took the average price for the euro dollar in the last 6 months, you're probably saying you're probably around 108, 107, 108. We've been a little bit higher up to 112, been a bit lower to 102. And that's the current price where we find ourselves at the moment. So if we zoom right in and we look at price action over the last few weeks, what's this, 4 weeks, we've kind of rallied. But broadly, this breakout here, which was the most significant rally for the euro in quite a while, was very much related to some spending commitments across Europe as a result of the issues in the Oval Office, I guess, with regards to Donald Trump. And again, the fallout of things like that really do create an awful lot of political instability and indecision as well. But we've rallied over the last 3 weeks to the upside. We've kind of rolled back over aggressively to the downside, predominantly over the course of last week. We've made further lows, and now we're beginning to reverse, and it's looking a little bit more positive for markets like the euro versus the dollar. Further indecision as well in markets like gold. We've actually made a new technical high, but the last 2, 4, 6, 8 days, we're up at all-time highs, of course, which is a broad expectation during these periods of uncertainty, and that's pretty much what we're seeing. And also, if you look at markets like the S&P 500, over the last 2 weeks, we've been up and down an awful lot, but I suppose we're currently trading pretty close to like an average price probably over the last 8 to 9 trading days. And this is as a direct impact of good 3-4 weeks of really strong selling. Again, very much tariff uncertainty at the forefront. So we've got this sort of current market condition, and those of you that attend and join our pre-market trade plan sessions every morning, you'll see that because of the current market conditions, where our summary is pretty much around a mixed market dynamic, and that's currently what we're trading. So we're I suppose what we want to leave you with really as a result of this uncertainty, and you go through periods of significant uncertainty, is the importance of being sometimes actively patient. So that is quite an important mindset, especially psychologically, because it's very easy to get very frustrated, to chase your losses, to increase trade size, to increase your frequency, and these are all the wrong behaviors to be developing. If you can be actively patient, you can sit on the sidelines waiting for very specific opportunities to come your way. Now, that's our approach as things currently stand. You can't always make significant profits in all market conditions all the time. Occasionally, you do need to just assess these market conditions for what they are, and just underline the fact that we are dealing with really quite significant uncertainty. And from a market perspective, we've already seen the 3-4 week drop somewhere to the tune of 9-10%. Now, we're bouncing off the lows a little bit, and it remains to be seen whether this is going to purposefully rally to the upside where resilience comes to the fore, or whether we will actually take a new significant leg to the downside. And there's likely to be catalysts for these moves. And we're just unclear right now. No one can really indicate and tell us what the impact behind Trump tariffs is likely to be, because it doesn't seem like he really knows himself. That he'll come out and he'll make certain statements like 25% tariffs on this, this, and this, and then you might find it's watered down, a few days later. So we'll have to really see how a lot of these markets work out, but we're really interested in being really targeted in terms of very specific opportunities at very specific times. And that's really what sort of actively patient is really being about. It's not getting into trades for the sake of it. It's not being frivolous with our capital. It's actually being more conservative with our capital. And if we get a good opportunity that fits, I suppose, the market conditions at that particular time, we're more than willing to take the trade, and we're looking to manage these trades accordingly as well. So not just risk management in terms of your exposure, trade frequency and trade size, but also your ability to manage those trades if prices move in your favor will also prove very important skills for us as traders during these current market conditions. Okay, so I hope that makes some sense. If you do have any questions about anything covered in this presentation, do feel free to drop us an email at support@thelivetrader.com, and we'll be happy to get back to you as soon as we possibly can. So all that's left for me to do is to thank you sincerely for joining us for this short video. Sometimes you are just dealing with significant uncertainty. These are one of these periods right now. So take those steps, be more targeted in your analysis, in your trade identification, be more conservative with your trade size and risk, and we'll come out the other end when we will have a little bit more clarity. Whether it's to the upside or to the downside, we'll get that clarity, I'm sure, pretty soon. So very important to be patient, but be ready. Okay, so from everyone here at Live Trader, thanks for joining us as always. Take care of yourselves, and we'll speak to you soon. Bye for now.